All right, without further ado, I'd like to introduce Stephanie Skryzowski. She is the founder and CEO of 100 Degrees Consulting, a visionary, a chief financial officer, and essentially she helps purpose-driven leaders develop their numbers and make better business decisions overall. So thank you, Stephanie, for joining us this evening, and I will let you take over.
Great. Thanks so much, Madeline. Thanks for having me. I'm super excited to be here and to chat with everybody this evening. So I'm going to go ahead and share my screen here and get us rolling. So we're going to talk about the purpose-driven P&L and really helping you as a business owner build your roadmap to profit. So I'm super excited to chat with you. We're going to cover three things tonight. We're going to talk about establishing your foundation, so making sure that all of your ducks are in a row from day one so that you have a really strong foundation to jump off from and to build from. We are going to talk about looking back, so looking into history, right? Understanding what our financial reports, what our P&L and our balance sheet are telling us. And we're going to talk about forecasting our future. So creating a roadmap to make smart decisions to achieve our goals and really literally see into the future of your business, of your financials. So I'm super excited to chat with you tonight. So like Madeline said, I'm a visionary CFO and my business works with purpose-driven leaders of small businesses, of nonprofits around the world whose focus is to make an impact. And so that's where the purpose-driven P&L comes from, that we want to have a purpose in what we are doing. And so I'm really excited to share with you tonight. So if you can't keep your money, you won't be able to make an impact with it. So I hear all the time from potential clients and people I'm talking to, like, I had a great year in terms of revenue, but why don't I have any cash in my bank account? Like, what is happening here? And so that is where a lot of what we're going to talk about tonight comes into play. If you can't keep your money, you're not going to be able to have that impact that you want to have. And so a lot of people I talk to as well really struggle to reach the revenue goals, the big goals that they set for their business, because the goals that they're setting are arbitrary. They're lacking that purpose behind them. And so you know, people say, well, I want to finally hit 6 figures in my business, or when I make 7 figures, I'll finally be successful. Or maybe you feel like, you know, you are hearing all of this stuff about startups and, you know, you feel like you really need investors to be legit, but these are arbitrary goals. They're lacking a purpose and impact behind it. And so I was in the same place a couple of years ago. I have a business coach and she asked me, you know, I had thrown out an arbitrary revenue goal for my business. And she said, well, why do you want to make another $100,000? And I was like, I don't know, more is better, right? Like, is it more better? And she knew then what I know now is that, you know, our goals have to have a purpose behind them in order to be attainable. And so for me, I knew that adding another $100,000 to my business meant that I would be able to save more for my daughter's education and give them a better start to their adult life than I had, right? Not graduate college with a whole bunch of debt. So that was the purpose behind why I wanted the specific revenue goal that I did. And so for you, thinking about that, maybe it's, you know, supporting your household expenses or taking a vacation when we're all finally allowed to travel again, or, you know, paying off your mortgage or donating or creating more space in your life to volunteer. It could be anything, right? But our goals, our business really has to have a purpose behind what we are doing so that we are driven to accomplish those goals. So a lot of times people get really hung up though. They're like, yeah, I have these goals, but I don't know how to get from where I am right now to where I want to be. And I totally understand that because numbers are very intimidating for a lot of people. But I truly believe with a little financial knowledge in your back pocket, like we are going to talk about this evening, you really can be the CFO of your own company. It does not have to be complicated. It does not have to be stressful. I'd like to make this really, really simple and straightforward. So I hear this a lot. I hate math. Okay, I get it. I get it, right? Like this is not everybody's favorite subject. This is not the like most fun thing to do when it comes to your business. Like finance and legal, I get it. We all know that they're necessary evils, but I don't think they're evil. I do not think that that knowing your numbers is evil. And I hope you don't either, because like I'm going to show you tonight, it really doesn't have to be hard to do this. So hopefully I have convinced you. I hope you are ready to sort of listen with an open mind and think about how you can better manage the numbers in your business. So like I said in the beginning, it's really 3 different things. And these are the things that we walk through all of our one-on-one clients, that we help all of our members with that are in our membership, establishing your foundation, looking back and understanding your financial reports, and then forecasting your future. It's really these 3 pieces. If you can master these and stay on top of these things on a monthly basis, you are going to be able to achieve your goals. You're going to make smarter decisions for your business, and you're going to grow the way that you want to grow. So let's dive right into it. So when we talk about establishing your foundation, what is this? What does this really mean? So I like to think about the foundation as 3 different things. So first are the legal basics, right? We want to make sure our business is registered as a business in the correct way in whatever states or territories or counties or cities or whatever it might be. Your business needs to be registered. I also like to think of legal basics as making sure that you have a business bank account that you're using and you are not mixing up funds with a personal bank account, because nobody wants to sort through your bank statements at year end and trying to figure out, what's groceries, what are supplies for your business, what's a payment to a contractor versus what's a payment to the, the babysitter. So making sure that you've got that separate business bank account as well. It's also a tracking system, a way to keep track of the money coming into and going out of your business, and a monthly routine. So again, making sure that you are coming back to your numbers month after month to really stay on top of them. So why is this piece important? You really need to get your ducks in a row before you can get any insight out of your numbers. I think we've all heard the saying, garbage in, garbage out. So if we don't have a good system for keeping track of our numbers from the beginning, then we're not really going to be able to use those numbers, to analyze those numbers, to understand anything about our business if the numbers that we're looking at really can't be trusted, right? We have to get these ducks in a row before we can do that. So if you're taking notes and thinking about, okay, well, what do I need to do after tonight? So I want you to make sure your business is legit. So that means registering your business in the right way. If it's not already, making sure you have your EIN and everything is set and good to go there, making sure you've got that separate business bank account. And while you're at it, if you've got the business checking account, get yourself a business savings account as well. That is super important to make sure that we've got a separate place to set aside money for taxes and profit. So have that business bank account. The second thing is getting the right tools to manage your numbers. So I get the question a lot, well, what software is best? Well, I think that's personal preference. I say whatever software you're going to use, right? And if for you, that is an Excel spreadsheet because you are in the early stages of your business. And so, like, I got to keep it as simple as possible. I'm going to track my revenue and my expenses in an Excel sheet or Google sheet. That's fine. If you're like, no, I want QuickBooks to like help do some of the work for me because QuickBooks connects to your bank account. And so every transaction automatically lands in QuickBooks. You'll never forget anything. Then QuickBooks is the way to go, whatever system you're going to use, but get it, set it, and then don't forget it. Definitely don't forget it, but then keep rolling with it every single month. And then finally, creating your monthly finance routine. And what that means is that every single month, setting aside time on your calendar to look at your numbers. And getting into the habit early is so important. I recently saw a post in a Facebook group that I'm in where this person said, I was so surprised when my tax accountant told me how much money I made last year. And I was like, oh, you should not be surprised by your numbers. And it was a good surprise for this person. She was happy, but I was like, no, you need to be staying on top of your numbers every single month. So the amount of money you're making or not making is never a surprise. So getting and establishing that monthly finance routine. So a lot of times, you may be thinking, okay, well, I've got my business bank account. I just want to outsource this. I don't want to think about my finances. So the other piece of the sort of financial foundation is making sure that you have the right players on your team. You've got the right finance professionals on your team. And so if in the beginning stages, maybe that's you, and maybe you just have a tax accountant do your taxes, that's fine. Or maybe you're like, all right, I'm at the point where I really want to outsource the bookkeeping. I want to explain to you, there are 4 different finance professionals that oftentimes people get mixed up, like all the time. And I hear, potential clients, I'm on the phone with them and they're saying, yeah, I hired this bookkeeper and I really wanted her to help me provide some analysis into my numbers and tell me what they mean and help me make decisions. And I'm thinking, that's not really the job of a bookkeeper. So it's kind of no wonder that you were disappointed that that's not what they do, because it's really just not what they do. So I want to explain the roles of each of these 4 different people. So we have your bookkeeper, your accountant or your CPA, your CFO, and a financial advisor. So I wanted to explain again what each of them do. So if you are at the point where you're like, all right, we've got some money coming in the door, this is something that I feel very strongly that I want to outsource, I want you to know what you're getting when you hire each of these people, right? So your bookkeeper, this is the person that's inside QuickBooks. They are looking at the daily transactions, they're reconciling your accounts. So that means they are making sure that QuickBooks matches what's on your bank statements. Usually they're an expert in whatever accounting software you're using, whether it's QuickBooks or something else. They're in the sort of the line item detail, the very, very detail oriented in the day-to-day. Your tax accountant or your CPA, they are your IRS guru. They file your taxes. They may give you some tax strategy, either at the end of the year or throughout the year to help you minimize your tax liability. They may tell you what your estimated payments throughout the year should be. And they're going to tell you what is a tax deductible expense for your business and what's not. So they are your tax and compliance guru. Now, your chief financial officer, that's me. We really help you take those numbers from the bookkeeper and give you analysis and insight and help you make decisions. So we are really like that strategic thinker that partners with the CEO, with the COO in the business to help you make those decisions to grow and to reach your goals. And so we're very future oriented, and we are going to help you create that forecast that we're talking about. We are going to be the ones to help you think through, okay, I feel like I need to hire a couple of people in my business. Is this the right decision? So we're going to crunch the numbers. We're going to look into the forecast. We're going to look at your revenue paths, and we can tell you, yes, this makes sense, or no, maybe this doesn't make sense right now. Let's wait a couple more months. So that's what a CFO does. And finally, your financial advisor, often this is a CFP, a certified financial planner. They help you with investments or fiduciary. They're often, helping you with really a long-term wealth planning strategy. And often they help you on the personal side as well, manage your personal finances and personal investments. So I hope this part was helpful because, like I said, often a lot of people are like, oh, I thought a CFO and a bookkeeper was the same thing, or oh, I thought a CFO and a tax accountant or a CPA was the same thing. No, definitely different roles. Sometimes, I will say, sometimes one person can do both, can do 2 of these different roles. So often I see, CPAs also do bookkeeping. So they'll do the bookkeeping and they will file your taxes. So that, it's possible, but just know that as you are looking to potentially outsource in your business, know that these are different roles and different seats that you need to fill on your business bus. So the second thing, we just talked about establishing your foundation, making sure that all of your ducks are in a row so we can really just build off of this foundation. The second thing we're going to talk about is looking back. And so looking back really refers to understanding your financials, right? And when we think about our financials, our P&L, our profit and loss statement, that is history, right? That is something that has already happened. So right now, today is March 1st. we are now looking at the P&L for February, right? For all of our clients, we're looking at February's P&L. It's what's already happened. And so what we like to do though is take what's already happened and run some analyses and look at some different metrics to sort of help get a pulse on your business, right? Now, we can't change anything that's already happened. So there's only so much we can do there, but we can see trends. And once we see those trends, we can then use that information to make changes in the future, right? So this is looking back is not just looking at your P&L with your eyes sort of glazing over like, what does all this mean? Okay, I'm good. I got enough money in the bank, I'm good, and filing it away. This is really knowing what the numbers mean, knowing the story that your numbers are telling you. So every single month, as part of your monthly finance routine, which in step one, in establishing our foundation, we talked about that. So now you have a monthly finance routine where you've got an hour set aside every single month to help you look at your numbers. There's 2 financial reports I want you to review, and we're going to talk about both of those in just a second. And then there are a couple key metrics that I really like to use to tell the story of how your business is doing. And so I'm going to share those metrics with you as well. And they may be familiar to you, they may not. But this is really going to give you a sort of benchmark, like a starting point. Okay, how is my business doing? And I'm going to measure from there and maybe set some goals related to those metrics as well. And then the last thing I like to do, again, looking back as part of my monthly finance routine, is check your bank balance. So I know people that check their bank balance literally every single day, their business bank account balance, and I guess sometimes their personal too. But they check their bank balance every single day, if not daily, weekly, if not weekly, 100% monthly. So this piece is important for a couple reasons. First of all, we want to know what's going on in our bank, right? We want to make sure like nothing weird is going on and that, no strange charges are in there or anything like that. So it's sort of partly logistical. It's partly mindset. So mindset is so important as we are managing our numbers, especially if you're a person that like really doesn't like numbers. If numbers make you feel scared or, anxious or just frustrated or worried, spending more time with them is going to help that feeling be more comfortable. So there's a saying that I love, and I'm looking up on my shelf right now because I have it like in a little plaque. It says, where your attention goes, the energy flows. And I think we all want more energy towards our money, more energy in our bank account, right? So giving some attention there is really, really important. So I'm going to show you the 2 reports, like I said, that we should be looking at every single month as part of your monthly finance routine. So the first is your comparative P&L or profit and loss. So the reason I put the word comparative here is because it's really important to look at your numbers compared to something else, right? Hence the name comparative, hence the term comparative. And I say that because if we're looking at, for example, if we're just looking at August here in a vacuum and we are not comparing it to anything else, I have no idea if these numbers for August are good or bad. No idea if I don't have any point of comparison. And so what we have here are both August and July with the dollar amount change and the percentage change. So I can see, okay, from July to August, our revenue decreased by about $14,000 or 7%, right? So that comparative piece is super important. So I want to show you a couple things that you can look at on your P&L so that it means a little bit more than just like, okay, revenue was this, expenses were this, okay, moving on, right? Like we want to pull a little bit more information out of our P&L. So the first thing I like to look at is revenue diversity. And so this is really how much revenue is coming from each revenue source, each revenue stream that you have. And so we're calculating that by just looking, taking each revenue stream, so digital course sales of 167,000 divided by total income of 192,000, and then we get our percentage, right? So in this case, they're getting like the vast majority of their income from their digital course sales. So I think the goal here, and there's not necessarily a right or wrong, but what we're measuring is really that idea of like not putting all of our eggs in one basket, right? Like making sure that our revenue streams are diverse enough to weather any storms, AKA 2020. So making sure that we are conscious of that. And you might be at the point in your business where you're like, I've got one revenue stream and that's it. And that's fine. That's fine. But it's something to just be aware of, right? Like just because we're looking at these numbers in a new way doesn't mean we need to go and pivot and change our entire business model. But it is good to know that, right? So the second thing I like to look at is your burn rate. So your burn rate is your average monthly expenses. And this number is really important to know because we need to know how much money is going out the door every single month. How much does it cost to run this business? And especially in 2020 and sort of surviving the year like we all have, we needed to know how much we were spending every month, how much it costs to run the business every month, so we know how much to bring in every month. Right, so that is really important to know. And so in this case, we're looking at two different back-to-back months right here. Usually you'd be looking at a bit of a longer time period, so maybe looking at year to date. So looking, if this were August, looking from January through August, and then dividing that by 8 to get the average. Sometimes you can look at the past 12 months. Maybe you're looking at a quarter. Whatever it is, it's really just looking at expenses over a period of time divided by the number of months in that period of time. And the last metric from our P&L that I really like is our profit margin, right? I think we all are familiar probably with the term profit margin, and this really just refers to the revenue left over after all of your expenses. So this one is important to track against yourself over time. So I get the question a lot, like, what's a good profit margin? And honestly, everyone hates when I say this, but it really depends, right? It depends on your business. It depends on your industry. It depends on, for a lot of people, the time of year. We have a lot of cyclical businesses where their profit margin is in the negative. They are in the red for 2 or 3 quarters of the year. And then they have, Q4, they're just sort of skyrocketing, right? And that's just how their business runs. And so if they were to compare, January to their last December, like there's just no comparison there. So again, it's knowing your business to know what that number is for you. And so one way we like to do that, if you're thinking like, oh, okay, well, I don't really know what my profit margin is right now. One way we do this with our clients is we look at the last 12 months of financials and we tell them, okay, this is what your profit margin has been over the last 12 months, month to month. Looks like about average is this, or maybe, Q2 and 3 are your highest. And, so we look at their own history to sort of give that benchmark to start off. And so that's something that you can do as well. If you're like, okay, I don't know what my profit margin should be, well, calculate it for the last 12 months. And actually, maybe the 12 months before that, if you've been in business that long, just because 2020 was such an anomaly. But yeah, that's a good starting point. So the second report that I really like to look at is the balance sheet. I think we've all heard of a balance sheet. Not a lot of people spend very much time on the balance sheet because the balance sheet is a lot more like accounting type stuff, right? Like receivables and liabilities and payables and what is all of this? And likely if you're in the beginning phases of your business, your balance sheet is probably pretty straightforward. So we have our assets at the top, and our assets are what we own. So likely for you, you've got your bank accounts. Maybe you've got some fixed assets on here, some computers or something. We've got fixed assets. Then on the bottom are your liabilities and your equity, and liabilities are what you owe. So we want to make sure that we own at the top more than we owe at the bottom. So the couple of metrics that I like to look at on the balance sheet are months of cash on hand. And this is probably my favorite. I love this metric, and I realize that probably makes me sound a little bit nerdy, that I really, really like this metric. But this is telling us how long could we operate if not another dollar comes in the door. So this is something that we calculate for our clients every single month, so they always know how many months of cash on hand they have. But let me tell you, a year ago in March of 2020, we were doing a lot of calculations for people and looking at, okay, how many months of cash on hand do we have? What does that mean? So this is a really important metric to know. And so basically, we're just taking our total bank balance divided by that burn rate, right? Our average monthly expenses. So if we had $100,000 in the bank and our average monthly expenses were about $20,000, that means we have 5 months of cash on hand. So again, I get asked the question a lot, what's a good amount to have in the bank? Well, I'd like to say 3 to 6 months. 3 to 6 months of expenses. So taking that burn rate times 3 to 6, somewhere in there. Now, for some businesses, 6 months of expenses is a lot. It may be unrealistic and it may not be necessary, to be honest. For others, 6 months is really important. And so again, I think it depends on your business. It depends on what type of expenses you have. Are your expenses mainly, payroll and rent and other fixed costs versus, a whole bunch of variable things that you could potentially cut if you needed to? So again, best practice really varies, but if you needed a benchmark to get yourself started, I would say 3 to 6 months of expenses. So the next metric I like to look at on the balance sheet is a quick ratio. And this is exactly what I said before, just making sure that you have more assets than you do liabilities. And so this measures your ability to pay your debts, right? So in this case, this is like quite a large balance sheet, but you can see they have over $1 million in assets and about $400,000 in liabilities. So they've got at least like 2.5 times their liabilities sitting in assets, which is great. That's a good position to be in, and the higher the number, the better. And you may have, I know from this sample that like this long-term notes table, this is the PPP loan. So you may have gotten a PPP loan last year in 2020. If it's not forgiven yet, it may still be sitting on your balance sheet. When it is forgiven, it will be gone from your balance sheet. So you technically won't owe that anymore. Okay, and that third thing, like I said, that third thing as part of looking back is checking your bank balance. What you focus on expands, and where your attention goes, the energy flows. And so let's send some energy and expansion into our bank account by making sure we are checking it every single month. Okay, so now we've dug into our reports. We've established our foundation. We have dug into and understand our financial reports. And now we're going to look into the future. So everything we've done so far is sort of foundation setting, looking back, understanding what's already happened, and then looking forward into the future. So this is my favorite part. So a forecast is really just a roadmap for planning your revenue and your expenses. At the end of the day, it's a budget. But I don't like to call it a budget because nobody likes budgets. Everyone runs away from budgets. This is not a typical, cut out the $5 lunch.
Oops, Stephanie, I think you might have cut out. So we're going to wait a couple of seconds. Well, while we wait for Stephanie to maybe come back on, does anyone have any questions that we want to ask? I'm going to go ahead and email her the link again. Okay. Oh, hey.
That was so weird. Can you hear me?
I can, yes.
Oh my gosh, I hope I wasn't talking to myself for too long.
We cut out right when you started talking about the third step. So financial forecasting.
Okay. Oh my goodness, that is so strange. Okay. All right, let's dive right back in. Sorry about that.
No worries. Thank you for coming back so quickly.
Yeah, I didn't even do anything. It was all of a sudden I was back. So, technology.
Mm-hmm.
Okay, here we go. So we are talking about forecasting your future. I was saying this is my absolute favorite part because we're looking into the future. We are using our crystal ball and the powers of Excel to help us make decisions and grow our businesses. So a forecast is really a roadmap for planning your revenue and your expenses. And at the end of the day, it's a budget. But I don't like to call it a budget because nobody likes budgets, right? We think of budgets as really limiting and scarcity minded, and we have to scrimp and save and cram as much as possible into this budget. No, this is not a cut your lattes kind of budget. This is a resource plan to make sure that you have got the resources that you need to achieve your goals, and that you've got the revenue mapped out so you know exactly how much money you need to bring in every single month to hit whatever goal, whether it's a financial goal or an impact goal or whatever it might be for your business. Making sure that you've got a plan to be able to meet that. So without a plan, without a map, you're not going to accomplish your goals. And I think about, let's pretend that we're in the days before smartphones, and remember when you had to print out like the MapQuest directions from getting from where you are now to maybe this road trip that you're going on 3 hours away that you've never been before. If you don't have a map, like you're probably going to end up there, right? Like you might end up there, but you're not going to go the most efficient way, that's for sure. You're probably going to waste time, and you're probably going to waste some energy and resources and get like mad along the way, right? That's very frustrating. So this is really a roadmap. Forecasting also allows you to pivot while still staying on track with your goals. And I know so many entrepreneurs that did some like pretty solid pivots in 2020, opening up new revenue streams in their businesses, doing some like the little pivots, like 30-degree pivots, and some like 180-degree pivots in their business. And having a forecast allowed them to do that with ease, because we mapped out exactly what that would look like and exactly the revenue and the expense changes and things that would need to happen so that they could do that. And that's what forecasting does. It gives you that clarity and confidence to make changes and make decisions with ease in your business. So again, if you are taking notes and keeping track of what you need to do after this evening, creating a forecast or creating your profit plan should be like number one at the top of the list. Well, after establishing your foundation, right? You get all that down, then creating your profit plan. So the interesting thing about this though is, like I said, it's not a budget. It's not a typical budget where you set it at the beginning of the year and then it sort of lives somewhere in Excel or maybe printed out even or in a binder, and then you don't think about it again. No, this forecast is alive. We look at it, we update it, we edit it monthly. And so throughout the year, at any given point in time, you have a crystal clear snapshot of what your entire year is going to look like, because we're looking at actuals, what's already happened, combined with our forecast. And so we've got like, that is like the closest you can get to looking into a crystal ball in your business. And so with this, you're going to be able to make really, really smart decisions that are aligned with your purpose, that are aligned with your goals, and that are aligned with your financials. So as you can tell, I am super passionate about this. So this is kind of what, this is what I'm talking about. This is what it looks like. Your revenue roadmap, your profit plan, whatever catchy name you want to call it, it's basically your P&L. So you can see here on the left-hand side, we have each of our revenue categories. We have all of our cost of goods, we have all of our expenses, and we have it mapped out like in detail, each line item, how much we are bringing in or how much we are spending every single month, month by month by month. And then up here, you can see, okay, well, we've got our actuals. So let's just say, we've got actuals through June, and then we have our projections through December. And so what we can do is, as we have closed the books for June, we're in early July right now, we can say, okay, there was that $20,000 contract that I thought was going to come through in October. Now I know it's going to happen in November. Okay, well, let's change that around now, because that gives us just a little bit more clarity, a little bit more visibility into the future of our business. So we do this every single month. We do this with our clients every single month. So, we get questions all the time, like, I want to hire somebody. When does that make sense? Well, I'm not just going to answer off the top of my head, right? Let's plug it into the forecast, and we can tell you exactly when it makes sense to do that. So that's kind of the process with the forecast. The other piece is a cash flow. Again, this is a cash flow forecast. So this is looking not only at what has already happened in the past, but what is going to happen in the future. So again, this is as close as we can get to that crystal ball of being able to see how much money will be in your bank account in the future. So this is really an interesting one. So what we have here is we have our opening cash balance, right? So how much money do we have in the bank on January 1st, 2020? What comes in, what goes out, and our ending balance for the month of January. So the January ending balance becomes the February opening balance, right? And so on and so forth. And so you can see here, look at their ending balance starts at $1 million in January and it goes down, 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 down to only $100,000 at the end of September. Well, then they have a huge spike in revenue in October, and at the end of October, their balance is a bit higher. Then here we're also tracking their months of cash on hand, that metric that I told you earlier that we track for every single one of our clients. So we can see, okay, when are we in like the safe zone, right? When do we have like 3 months of expenses in the bank? And when are we getting a little bit too close for, a little too close for comfort towards the bottom of the barrel here? And in September, it's like, ooh, that is, we have like 1/2 of a month. We have 2 weeks worth of expenses in the bank. So including this in what you are doing on a monthly basis as part of your monthly finance routine can really, again, help you make decisions. Because think about this. What if in January we were making decisions based on how much money we had in the bank in January? We got $1 million in the bank. We can do anything, right? We can hire a bunch of people. We can buy that new equipment. We can, invest in a new coach or whatever it might be, a business coach. We've got $1 million in the bank, but they are not seeing into the future of their business. So if they make, $100,000 worth of decisions in January, they're going to end up with nothing, literally no money in their bank account in September, unless, they cut spending throughout the year, or they, they earn more money, whatever it might be. But we don't want to put ourselves in that position. And it's something that I see entrepreneurs doing all the time. So having this visibility into cash, not only revenue and expenses like we talked about, but also cash is really, really important. So now that we have all this new information, now that we have these metrics, this insight from our P&L, and now that we have this visibility into the future of our business with our forecast, how do we actually make good decisions? What do we actually do to change things, right? If we realize, our profit margin is way too low, I got to do something about that. Or, man, I don't have enough cash in the bank, I need to do something about that. So you might be asking, well, what do I actually do, right? What do I have to actually do now? So I have a couple ideas, and this is just a place to start. But if you're looking at your numbers and you're like, man, my fixed expenses are, I can't really change them, I need to increase my revenue. So what I would encourage you to do is look at your most profitable revenue streams. What is the most profitable for you? Where are you making the most money? And double down there, double down on the most profitable revenue streams. And if you're, if you're a service business, especially, think about keeping your current clients rather than, think about if there's ways to serve your current clients in new ways instead of having to go out and continuously search for new clients. So focus on nurturing them, engaging them, serving them in a different way. So those are a couple ways to think about increasing your revenue. On the expense side, what if you're looking at your numbers and you're like, oh my goodness, I have no idea how expenses have gotten so high so quickly. I hear you. This happens all the time. And this is such a good opportunity to just kind of do a deep dive into your numbers and figure out, all right, do I have any unnecessary or unused recurring expenses? Let's just get rid of them. I think we all know that we have subscriptions that we sign up for that we don't use, right? I think we can all raise our hands, been there, done that. We all have got that, that one software that we thought was cool, that we signed up for a trial, and then we are still paying for it. We've never used it, right? Cancel those. Another thing you can do is postpone non-essential activities, right? If you're like, oh yeah, I was gonna buy a new computer in March, but after looking at this, I'm not sure I can afford that. Well, why don't you just bump it back to June or July and see what that does to your forecast, right? So you can shift around the timing of things because we have this mapped out by month. That's really helpful to shift around the timing if you need to. You can also think about reallocating money to revenue driving activities. So for example, we have a couple of clients whose businesses run a lot of Facebook ads. and they run Facebook ads to their course. They have a digital online course. So they run Facebook ads to the course, and that was converting really well. Those ads were performing really well, and they were getting like a 3-to-1 return. So, you know, they put $1 into Facebook ads and they would earn $3 from selling their courses, you know, that kind of scale. And so what they did was they pulled out money from some other activities in their business that weren't really, you know, generating a lot, and they put more money into Facebook advertising to increase revenue. And then the last thing, you know, I think is a little bit overlooked, but building relationships with service providers. And so that basically just means having a conversation with different people that you pay, and sometimes asking, maybe it's asking for a payment plan or asking to change the due date on a particular bill or whatever that might be. I have almost always had success with this. Like, people you know, are quite willing to help oftentimes. And so if you find yourself in a situation where it's like, okay, I got to take a hard look at my expenses here, this is an option, right? Having these conversations with people that you are paying money to and seeing how they might be able to be flexible with you. And finally, boosting cash flow. So let's say you go through your revenue and expenses, things look as good as they possibly can, but oh my gosh, you still don't have cash in the bank. So what's going on? Well, first of all, you might have a lot of outstanding invoices or pledges, or, you know, however your business is structured. That might be a lot of money sitting on the table that you just haven't asked for, right? You haven't asked your customers or clients to pay you often enough. I was just talking to somebody the other day who she was feeling a little bit tight in terms of cash. It was like, oh, I don't like how much money is in the bank. I feel like this seems really low. And then I looked at her balance sheet, and she had over $30,000 sitting in accounts receivable, in invoices that she had not yet sent to her clients. And I'm like, girl, send those invoices, get that money in the door. So that's something that often, you know, that kind of gets pushed. It's administrative, right? It gets pushed to the bottom of our plate, but let's collect that money. And the next thing to do is to think about is to potentially spread out or defer payments. And that kind of goes back to building the relationships with service providers. So if you feel like, all right, I really need to boost my cash flow, that this is an option to be able to do that as well. So hopefully that gives you some ideas. If you look at your numbers and you find a particular weak spot that you're thinking of, like, oh, I gotta fix that, I'm just not quite sure how, these are some ideas to kind of kick you off and get you started in the how of making some changes within your business. So to recap, establish your foundation, making sure all your legal ducks are in a row, that you've got a system to track your numbers, everything coming in, everything going out, and that you are creating space in your calendar, in your life, in your schedule to look at your numbers every single month. And I promise you, once you get into the routine, it does not take more than an hour per month. Promise. We have a membership where we've got a bunch of members, a bunch of business owners, and we actually do like a co-working session every single month for an hour. So everybody comes and sits for an hour, and we all do our numbers together. And sometimes it's quiet and everybody's working through individually, and sometimes we're kind of chatting through it, but they know that setting that time on their calendar, like that hour is going to be there every single month. And so I think it helps to get into that routine early. The second is reviewing your financials. So once you get into QuickBooks, you've got some numbers in there, you'll be able to run a P&L and a balance sheet, and just looking at a couple metrics, maybe out of the 5 or 6 that I shared with you, picking 1 or 2 that you feel like are meaningful to you, that are going to help serve as a benchmark or a yardstick for your business. Choose those ones and look at those every single month. And then the last piece, like I said, my favorite, is looking into the future of your business. So setting up that forecast and then not forgetting it. We don't set and forget anything. We set it up and then we look at it every single month. And so updating as we go, as we get more information, as the year progresses, updating that forecast. So at any given point in time, you have a snapshot into what your business is going to look like for the entire year. So I should have had this slide on because this kind of explained everything, but this is our framework for what we walk all of our clients through and what we really recommend. And like I said, it can be super, super simple. This does not have to be complicated. I hope that I showed you tonight that this does not have to be complicated. So I hope you feel like now, after our time together, you feel like you've got a little financial knowledge in your back pocket and you really can be the CFO of your company. We do not have to make things complicated for you to understand your numbers. So I would love for you to make your financial check-in a consistent habit every single month, because I believe that knowing your financials, knowing your numbers is the key to growth, success, and impact. I truly believe that this is, knowing your financials will unlock the growth that you want to see. So let's see, I think that's it. I'd be happy to answer any questions. And I also want to just share with you, I have a template for you. If you don't have a template yet for managing your numbers and for forecasting, if you go to 100degreesconsulting.com/profit, there is our profit playbook template, and it looks pretty much just like the examples that I showed you tonight. So that is over there for you. And yeah, so now I'd be happy to take any questions.
Great. Thank you so much, Stephanie. That was incredibly informative. I am now also excited about setting up, I'm sorry, not a budget, but
Yes.
a budget.
Yeah, exactly. Not a budget, but a budget.
Yes, yes. Well, great. So essentially the profit playbook, I have attached the link in the chat. We did email that out prior to the webinar tonight, but does anyone have any questions about what Stephanie went over, or about the playbook? Great. We'll let people chime in a little bit when that happens. So, well, I'm curious about the membership. I love how you have this, is it a community of people who just are similar, like-minded entrepreneurs who gather and they just talk finances?
Yeah, so the membership is entrepreneurs at varying stages in their business. Some are very early stage, like almost pre-revenue, and then we've got up to like multiple six figures. It's called the CFO Corner, and what it's really intended to do is give people a CFO in their back pocket that they can go to with questions, because a lot of times I feel like we often feel alone, especially when it comes to those more like professional services. If we're not ready to bring a CFO into our business, but we're like, I think I'm gonna have questions, but I don't want to pay like a couple $100 an hour to ask somebody. So this membership really gives them, it gives the entire framework that we talked about tonight, all of the templates and sort of like the up-leveled version of what we shared tonight. So that plus some more, that whole framework, and then yeah, just knowing that they have somebody that they can email anytime they need help. And we've got a couple monthly calls as well. We do 2 calls a month. So it's also, some people I think registered and signed up and are part of the membership just for that accountability, just to know that there's that space held for them to look at their numbers every month, because a lot of times we just avoid them. It's something that people don't necessarily enjoy, so we avoid.
I've never done that.
Right, of course.
I've never done that.
Avoided.
Never done that. Yeah.
No, of course.
Great. Yeah, I love the flexibility that's inherent in that community. That's really cool. Well, I don't think we will get any questions tonight, but I just want to thank you again, Stephanie. That's one thing that we love whenever we talk about finance. Like, it's very straightforward, which is so awesome. Well, great.
Exactly.
Well, I'm going to just quickly share some of the information that we went. Also, I already have this kind of on the screen, but you can see this is Stephanie's website. So 100 Degrees. This is essentially what you should see when you click on the link to access the profit playbook. But we're going to go back to this right here. Okay, so actually, let's present this. All right. So thank you all again for joining me tonight, joining Stephanie and I. And again, we are back open to the public. So we are open in a grab and go method from Monday through Saturday, 9 a.m. to 6 p.m. and Sunday from noon to 6 p.m. If you have any questions and want to do a one-on-one, feel free to contact us at champaign.org/book-a-librarian. You can also chat with us during our open hours and send us an email at librarian@champaign.org. Our next business event, it's our business roundtable, focus on financials. We're going to be reviewing some of the things that Stephanie has mentioned today. I'll probably play around with the playbook, fill it out myself, and I would love it if you all would come and join me. It's a very casual conversation, should be a lot of fun. I'm always down to chat about coffee as well. And lastly, I am Madeline, business librarian here at Champaign Public Library. If you need any help starting, growing your business, feel free to reach out, and always happy to help. So, I will thank Stephanie for being amazing, for also, I still am just so inspired, the fact that Stephanie was able to drop out and pop back in. So that was pretty incredible.
Yes, internet magic. I don't know what happened, but
You know what? Sometimes we're on the right side or the wrong side of that, but
yes.
it worked out tonight. So thank you once more, Stephanie, for joining us. And we have a couple of other thank yous chiming in the chat box. And I have a wonderful night on the East Coast.
Thank you. Bye.
Great. Have a good evening.